This video is designed to give you a very brief overview of just some of the information that you can find on the website. It is by no means comprehensive, and I'm going to try to keep this short. And as I've said in other videos, I hate making these things. Sometimes I swear. I say a lot, and I don't care. I'm just going to make it and be finished. I'm first going to just show you a few of the files and maybe show you a few of the videos that have some of the comprehensive project finance, corporate finance, real estate, M&A, and financial institution files on them. I'm going to give you a very brief overview of my book, my really two books, some articles, and some model exercises that if you're relatively new to modeling, provide a step-by-step guide to building models. I'm going to show you some of the models and documents and databases for various different financial and energy issues that download files and do other things. I'm going to show you some case studies on corporate and project finance and videos that explain how I think case some of the key points about the case studies. I'm going to show you some files that I have developed to do things like associate inputs with colors, read PDF files. That's an important one. Create value, build up graphs, and some other things. I'll show you where you can find slides and other materials on renewable energy and IPP and just how to evaluate electricity prices. I'll show you where to get some databases on renewable resources, financial information, and some other electricity cost issues. Okay, so let's get started. What I'm doing now is if you become a member, I'm going to have this silly thing where you can become a member of my website. I'm going to give you a password, and you can find these files, most of them on my website, not all of them. But the way I arrange it in other contexts is to put them into chapters. First chapter has all the models and the analysis. Second chapter has financial library. Third, case studies. Fourth, some Excel studies and files. Fifth, detailed things about electricity. In the modeling section, I have some corporate models, project finance models, M&A models, and real estate models, and you can read the rest of them. Let me start with project finance models. For all of these different categories, I show some examples, exercises, template models. Most important thing are the examples, I think. If you can follow a comprehensive example, you can steal ideas from that. That's the most important thing. You can try to build a model step by step and follow the step-by-step building one of them. You can see how they should really work. Now, for all of these models, I try to put the latest model on here, the one that really has all of the issues that I'm working on right now. This happens to be my latest right now. Of course, I'm sure by the time you listen to this video, if anybody ever does, there'll be another one. We have a contents page. I'll show you how to make that. I have this summary page. This is really important. The key thing about these models is that all the circular references are resolved. You can do a whole host of sensitivity analysis. You can look at structuring with different types of debt issues, with different MRA issues, with different funding, with different lengths of debt. You can switch from structuring to fix to risk analysis. You can look at sensitivity cases where you begin with the base case and change items around. You can, there we go. There's a master scenario page. Whoops, that's an Excel problem where you look at a whole host of different scenarios. You can look at all the options, make a graph with all the different operating assumptions. There's a layout for all the assumptions, including references to other sheets. This is this blue sheet where they came from. The red comes from the master scenario page. There are conditional formats, so we should have done this. So if we change the case, change it to the low case, hopefully the low inflation rate here is applied. Okay, and all of the models are, I hope, very carefully structured with dates, a whole section on dates, switches, various different structuring issues on how to cut off the sheets, how to make use shortcuts, how to carefully structure the model with EBITDA first, then depreciation to get free cash flow, then reserve accounts, then debt funding, debt schedule, a debt service reserve account, refinancing, a cash flow waterfall that includes min and max statements, and all of the formulas should be short, an audit page, evaluation summary page. What happened to my tornado diagram? Shoot. Oh, okay. Annual page, and so on and so forth. That's project finance. Now this is a comprehensive model. If you want to start and see some basic models, there are a few other things on the disk. This one says project finance concepts. That has starts with kind of let's go to next explanation side. Go to spreadsheet. Starts with simple cases, and there are little explanations with the data validation on a simple case, simple scenario case, and then it moves up and gets into more and more detailed issues. That's some of the project finance. If you're interested more in corporate finance, it seems that I get a few more people interested in project finance for some reason, although I think corporate finance has some very, very challenging issues. I've got a few files for corporate finance. For corporate finance, the big difference is we have to figure out how to incorporate history. So this is my friends at Gazprom Bank had me look at this company. I can't really pronounce the name. We've got, for each assumptions, you can show the history and the forecast. Let's look at sales growth. We can change the years around on the graphs. What did I do? Sales growth. I'm not sure. I don't like that graph right now. Let's look at EBITDA margin and return on invested capital. All right, and then we can see what the history is compared to what the forecast is, and then make an assessment of the value of the company using a whole host of different techniques. The same sort of scenario analysis applies. The last one, this time I call the last one a custom case, and we can change things like the capex and see what happens, both in terms of the return on invested capital, and then on the value. Okay, so here's what happens if we change the variable cost. So it's got a lot of the same kind of things. In the financial model, here's the big deal. The big deal is you'd like to incorporate, if we have a new set of history, we'd like to just write the history down in the file, and then be able to just update the model, and that's the way it works. We start with last historic year, that should have been a color, and then go through assumption by assumption, showing what the history is and then what the forecast is, and that's how this graph was made. Once you've put every single assumption in, there are the model addresses difficult issues associated with depreciation, some statistical issues in dissecting what's variable and what's fixed. There's the depreciation and deferred taxes. There's a whole reconciliation of the return on invested capital, and there's a careful analysis on how to compute the kind of cash flow plug. I use the same kind of very simple this time net cash flow, what you do if it's negative and positive, and have a couple of minimum and maximum tests, just like we saw in the project finance model. In the corporate model, you show the history next to the forecast, and you're very, very happy if the balance sheet balance. So there's the same kind of scenario analysis, then a valuation analysis. Now the real innovations in the valuation analysis have to do with this computing what happens in the terminal year, and there's all this, the whole model is very flexible to use different terminal years and apply different valuation assumptions with different growth rates. Another tornado diagram, and later I'll talk about how to get things from the PDF file. Perhaps I didn't emphasize enough just how important and how difficult issues associated with depreciation, computing the stable ratio of depreciation to capex, the stable ratio of working capital, which really isn't quite so difficult, stable ratio of deferred taxes. Those sorts of issues, I think, are the real challenge, as well as really interpreting the return on invested capital. So that's some of the issues in the corporate models. Then let's go back to this. Again, if you become a member, sorry about this membership stuff, you can look through these. Now, all of these ones, one I didn't talk to you about is each of these have a whole host of exercises. And in the exercises, if you're interested in seeing how to make those dates, you can walk through this. Now, I have to admit, I haven't made a video on all of these. My goal is to make a video and have a little description. Right now, there are the data validation tools, and you clear the thing, and then you try to take those inputs and just make the calculations yourself, starting with the little description. I've tried to, you can just see from the list here that there are a whole host of different exercises on a lot of different issues. So we try to dissect, or I've tried to dissect them all into very small pieces. You'll see a similar type of list for corporate finance, some exercises for the corporate models. Then for M&A, there's the same sort of thing, exercises, template models, which are less important, and examples. Let's see, what should we do for the example here? Perhaps I'll take this example. God knows what it'll be here. Okay. The same kind of thing. We have a summary page. This is just for the corporate model. master scenario page, financial model, and then you take this financial model and makes a series of assumptions about the transaction, when it's financed, how it's financed, the price paid for the company, and so forth. There's a sources and uses of funds statement, sources and uses, and a pro forma balance sheet. And then there's a whole acquisition model that just takes the corporate finance model and restructures it as an acquisition model. You can look at things like that, IRR on the investment, and a whole host of other things. So there's an example of an acquisition model. I'll probably have a little bit better one and another one. Then we have real estate models on real estate ones. Let me see, I'll just open this one. Whoops, don't worry about those things. That's because there's a mixed use model where you look at different dates and different project start dates and end dates, and look at when the model starts, blah, blah, blah. Okay, you can study all those. There are a whole host of different issues associated with real estate models as well. So that's, whoops, I'm still in chapter 1. Then if you would like to excuse me, I was just about to sneeze. If you would like to add Monte Carlo simulation to your analysis, let me see, I didn't quite put the same structure with this one. I really should have. I have a Monte Carlo template model. This one's zipped, so I think it's in the old Excel. What you could do is take this Monte Carlo model and make a database with correlation amongst variables, with different measures of volatility, different equilibrium prices, different distributions. You can then just automatically include these into your model. Now, I'm just showing you that because I want to illustrate that there is a kind of comprehensive Monte Carlo. What I would suggest instead of using this is actually just building the model, building Monte Carlo right into your model. So here's a project finance model that I did for my friends with my friends at Credit Suisse. It was so nice they allowed me to go to Switzerland. If you can add volatility into these, I hope. Show what happens here, and then you can show the distributions of all these. So it just takes our project finance model and adds these. Excuse me 1 second. We can look at different hedging strategies, and just a minute. It's on manual. No wonder it's not working. Okay, so this time we took Monte Carlo out, then we put it in, and we get correlations amongst, I hope, oh shoot, whoops,